Hi everyone, I'm Alex Price, Chief Executive of the UK arm of Fiera Real Estate. And in this video, I'm going to set out what we're seeing in the UK today and what we think it means for real estate investors in the years ahead. The economic effect of COVID-19 has been felt since late February, when the economy is largely shut down and forecasts for UK government borrowing this year have grown to over £270 billion. And it's not just the UK that's impacted. The IMF predict that all G7 economies other than China will see a deep recession this year before a rebound in 2021. This year they see a fall of an average of 7.7% in GDP. The recovery of the economy now relies on health measures being effective and the creation of a cure or vaccine for coronavirus being widely available in the next year. However, even the unprecedented government intervention is unlikely to stop a very deep global recession, with the speed of recovery now in the hands of science. Looking at the UK property market, valuations fell 2.7% in Q1, but retail assets suffered much worse, falling over 6%. Transaction volumes have reduced very rapidly after a strong start to the year, and even safe havens like London have seen leasing and asset sales down about 30% over their long-run average. Physical restrictions are stopping transactions happening, limiting the ability for us to have price discovery, i.e. to understand what the real value of assets is. In terms of supply, delivery of new buildings has declined through the closure of many construction sites and delays in the planning process. And even though sites are now reopening, restrictions on how they operate is likely to see 30% fewer residential units started this year than last year. The final but critical piece is the payment of rent from tenants, which has fallen. The UK government has suspended legal remedies that property owners would usually have to manage these defaults. It's no surprise that only over 60% of UK tenants paid their rent in March versus 90% in an average quarter. So, what happens next? In the short term, we're likely to see less rents paid in the next quarter and an increasing vacancy rate as disruption bites, especially in the retail and leisure sector. Failure to pay rent will lead to defaults on interest payments and banking covenants, which are unlikely to be easy to ignore by banks in the way that the GFC loan-to-value covenants were. Changing consumer behaviour even after lockdown will mean that many occupational markets will collapse, as half-empty aeroplanes, restaurants and hotels may not be economic to run. This will outweigh the undersupply of new assets, with certainty of income meaning that investors wish a higher risk premium than they would before for holding assets. Asset values will decline, maybe as much as 20% if the UK REIT market is taken as a guide, although we think high quality assets will hold up much better than this. Proactive investors will start to look at blind pool funds and structures unencumbered with legacy issues where they can enter the market, although I suspect most will simply sit on their hands for now. But it's not all doom and gloom, and in the longer term, there's light at the end of this tunnel. We expect the rapid and massive government intervention and liquidity will reduce yields across all income-producing assets. As occupational markets stabilise, sector-by-sector demand for high-quality income-producing assets will grow, pushing yields lower. The increased liquidity may also create long-term inflation concerns, enhancing the attraction of real assets. At a more fundamental level, though, tragic though every death from coronavirus is, in the medium term, the UK population is growing at around 300,000 to 400,000 people per annum, and this will continue to run ahead of newly reduced supply of assets. In turn, this will drive pricing in most sectors, but especially in residential. We also expect Brexit to re-emerge onto the political scene, with an exit of December 2020 still looking highly desirable to the hardline Eurosceptics, although it tastes to us like economic cyanide. Either way, today or tomorrow, the UK will need new corporate real estate footprints and new supply chains to be built. Finally, what have we learned from the terrible coronavirus experience? Well, in short, we think it will accelerate those key technological changes that many, including Fiera Real Estate, have predicted. Growth of online sales in the UK will continue its relentless march, and we have the highest sales per capita in the world already. It will also accelerate the need for more productive, amenitized offices to attract remotely enabled workers. So to summarise, in the short term, prepare for a short, sharp fall in values. Even if we can't see the effect yet, it is happening under the surface. But over the long term, be confident, as the relative performance of real estate in the UK will be excellent for investors, especially those with better quality assets, lower leverage, and an experienced management team.